Something just snapped in the market. And no, it was not a crash. Low moved 5.50%, while Dow futures finished down 0.17%. That's the kind of tape where someone with size is making a statement. Tonight we answer one question: real trend extension or a very expensive fakeout? In 10 minutes we decode breadth, expose who actually got paid and punished, and map the events that could flip this tomorrow. Okay, speed round. 1 minute, no fluff. S&P 500 futures down 0.06% to 6955.75. Breadth stayed supportive instead of relying on one megacap pocket. A wobble, but not a full trend break. Nasdaq 100 futures down 0.06% to 253,666.75. AI-sensitive growth stayed in demand while valuation pressure eased. A wobble, but not a full trend break. Dow futures down 0.17% to 49,448.00. Cyclical participation confirmed risk appetite beyond software and semis. A wobble, but not a full trend break. Dollar direction stayed messy, so equities avoided a one-way macro shove. USD JPY printed 156.04, down 0.17%. Higher levels pointed to persistent carry demand tied to US-Japan rate differentials. EUR USD printed 1.1805, down 0.10. Story of the day starts with a fake-looking rally that didn't fade. Traders came in expecting digestion after recent highs, and instead, the tape kept finding buyers. Setup: Nasdaq climbed 0.06%, and VMC ripped 3.68%. That's not defensive hiding. That's capital chasing growth with conviction. Conflict: everyone knows this only works while rates behave. Treasury yields stayed contained. If yields had jumped hard, this would have cracked. Confirmation: S&P added 0.06% and Dow added 0.117%. For once, not just 5 megacaps doing all the lifting. And volatility cooperated. VIX at 1808, up 0.84%. That's the market saying, panic later. Insight: money paid up for evidence and clipped names with uncertainty, which is exactly why low got hit. Implication: this regime is tradable, but fragile. If breadth stays broad, dips get bought. If leadership narrows back to a tiny clique, the party gets awkward fast. First trigger: tomorrow, Thu, Feb 26, 8:30 a.m. ET initial jobless claims. First macro gate before the open. A soft but stable print can support risk assets. A surprise miss may accelerate de-risking. Second trigger, then Thu, Feb 26, 9:30 a.m. ET cash open. NVIDIA reaction and semiconductor follow-through. Key test for the AI trade. Confirmation breakout versus sell the news rotation after earnings. Third trigger, rates up plus narrowing leadership equals momentum, unwind, risk. Rates stable plus broad participation. Trend continuation still has the edge. Keep that in mind. Winners and losers time. This is where you see who's actually putting money where their mouth is. VMC rose 3.68% to 316.76 because infrastructure spending and U translation, buyers paid for proof, not vibes. WDC rose 2.37% to 297.85 because AI storage demand stayed firm, supporting memory and data center hardware names before the U. Translation: buyers paid for proof, not vibes. NFLX rose 1.77% to 84.16 because momentum buying held in select large-cap growth pockets despite softer index futures. Translation: buyers paid for proof, not vibes. NVIDIA rose 1.61% to 198.70 because NVIDIA's earnings beat is confirmed, but the pre-market move has faded from the initial after-hours spike. Translation: buyers paid for proof, not vibes. Low fell 5.50% to 210.42 because guidance disappointment from lows kept retail sentiment defensive ahead of the U. Translation: the market pulled funding from stories with execution risk. BABA fell 2.18% to 98.11 because Hong Kong China tech weakness spilled into U. Translation, the market pulled funding from stories with execution risk. Forward look. Here's the part that can ruin a perfectly good thesis. Tomorrow pressure point. Thu, Feb 26, 8:30 a.m. ET initial jobless claims, first macro gate before the open. A soft but stable print can support risk assets. A surprise miss may accelerate de-risking. Then, watch this. Thu, Feb 26, 9:30 a.m. ET, cash open. NVIDIA reaction and semiconductor follow-through. Key test for the AI trade. Confirmation breakout versus sell the news rotation after earnings. After that, into next week. Thu, Feb 26. Tariff and policy headlines through U.S. session. Any escalation risk can lift gold and volatility, pressuring broad risk beta even if AI leaders stay bid. Bull case. If the tape behaves, jobless claims land benign, NVIDIA stabilizes above pre-market highs, and Asia's AI leadership expands into U.S. semis for a follow-through risk on open. Base case. Highest probability for now. Markets stay split. Korea-Japan strength versus China, HK softness, while U.S. futures chop until claims and opening hour price discovery settle direction. Bear case. If one key pillar cracks, NVIDIA fades further after the bell, Hang Seng weakness spills into related news, but with signal. No headline soup. KOSPI hits record close. 6307 taunt, 70%. South Korea's market led Asia as AI chip supply chain names surged, taking KOSPI to a fresh all-time high. It is a clean signal that AI leadership is broadening beyond U.S. mega caps into regional ecosystem winners. Meanwhile, this policy path feeds straight into yields, then valuation multiples, then growth leadership. Nikkei touched 59,000, but Hang Seng fell 1.4%. Japan stayed strong intraday, while Hong Kong lagged sharply, showing a clear split inside Asia risk assets. Regional dispersion is rising. Chasing Asia as one block is no longer working in this cycle. While everyone watches tech, softer energy pressure quietly cools inflation risk and keeps cyclicals alive. NVIDIA earnings fade, gold holds 5,186, and U.S. claims data is next. NVIDIA remains green pre-market but off-peak reaction levels. Gold stayed above $5,180 as tariff uncertainty supported safe haven demand, with U.S. jobless claims due before the open. The open will be set by whether macro data validate risk appetite, while investors reassess crowded AI positioning. Synthesis, plain English. Today's rally worked because breadth held while rates stayed civil. The market paid for evidence-backed growth and fined execution risk, so stock picking beat blind beta. If I had to bet right now, I'd lean with leadership that still has earnings air cover, hedge where estimate risk is rising, and size around the event calendar instead of candle FOMO. Earliest warning sign is simple. Leadership narrows while indices still look fine. That usually breaks late longs first. Base playbook. Markets stay split. Korea-Japan strength versus China HK softness, while U.S. futures chop until claims and opening hour price discovery settle direction. Before we wrap, one stat genuinely reframes how durable this move might be. Process beats prediction. Okay, this stat genuinely caught me off guard. KOSPI plus 3.7% to 6307. South Korea's AI chip ecosystem is having its moment. KOSPI cleared 6,000 and then sprinted to 6,307.27 in just a few trading days, a rare index-level acceleration for a major developed market benchmark. If KOSPI leadership persists, while NVIDIA's post-earnings momentum fades, global AI allocation may rotate from single-name concentration toward broader supply chain exposure. That's not just trivia. It reframes today as a participation story, not just an index-level headline. If this saved you 30 minutes of chart staring, hit like and subscribe. Drop a comment with the one event you want covered before tomorrow's open. Market Pulse, Daily lands every market day. See you in the next one.